Hello, everybody. How's everybody doing today? Yes, yes, yes. So let me just put it right out there. I don't want to say I'm bearish, but I'm very cautious on the market right now. Now, this is the first time, really the first time this entire year that I am sort of negative at this point. And here's why. Number one, we have seen a big flip flop in the sentiment. And this is something that I have spoken about in the past, and I predicted that it would happen. I said this many times that although I was bullish the whole entire year and fighting against this rampant and very misinformed and ignorant negativity and bearishness, remember, I pointed it all out back in February, back in March, April, May, with remember the Irisone conference and then the SALT conference and all those fancy hedge fund guys who are idiots, and the only thing that came out of those conferences was huge amounts of pessimism and negativity. I said you got to go against that. The fiscal flows were strong. It was indicating to me that the economy would pick up speed. We would not go into recession. The flows were sufficient to drive the stock market to new record highs. And that's exactly what happened. Even in the Brexit, with that huge sell-off we had, I said, you got to go against that. You got to buy. So you know the story. I've been out there very, very consistently in these videos, not just saying, hey, you got to buy, but giving you the reasons. And, using my MMT, really for me, it all came down to watching the fiscal situation and the flows and that sort of stuff. The problem is right now, two things. Number one, I mentioned it at the outset of my remarks here, is that the the sentiment has flipped to bullish. And I said this was going to happen. I said there's going to come a time when the market's going to be a lot higher and everybody's going to turn bullish. And we see this now. You see the guys like Druckenheimer, like all of these guys who were telling everybody back in May to sell everything, right? Sell everything. They're enthusiastic, they're optimistic, they think everything's wonderful now. I mean, how do you do that and proclaim yourself to be some kind of a genius investor? I don't understand that. The other thing that I see is if you look at, just interesting today, I looked at futures open interest in the S&P contract, the E-mini, back in June. If you look at the combined position of asset managers, leveraged money, and small speculators, that would be the speculative component, basically. It was short over 200,000 contracts back in June. That's when you should have been buying. Now, if you look at the combined position of the same group, asset managers, leveraged money, and small speculators, they are long, almost 100,000 contracts. So they're long up here, and they were short back in June, right? And finally, really the most important thing of all is that if looking at the fiscal flows right now, they are struggling to keep above last year. The growth in the flows, basically, it's flat year over year. And the reason for that is there were big cuts to Medicare that were signed into law by Obama, a Democrat. This is the thing. You look at these guys, there was a picture of Obama signing these cuts to Medicare. I mean, this is his going against his historical. The Democrats wonder why they lost. I mean, first of all, you nominate a corrupt criminal for your candidate, but more importantly, it goes back beyond Hillary Clinton. I mean, they've basically turned their backs on their historical constituency, which is the working class. How do you sign into law these big Medicare cuts? Anyway, I don't want to get into a political discussion, but I see the Medicare cuts in the fiscal flows every single day. And it's big. I mean, we're down already 17 billion. We just started the fiscal year. We're down 17 billion versus last year. Now, if we would have had that 17 billion, different story. Different story. We would have been growing. The spending would have been growing at about a 4% rate, which is very good. And I could have easily forecast a 15% increase in the S&P this year. easily. You're talking about 2490, 2500 in the S&P. Right now, I'm not saying it can't happen, but we got to wait on Trump. We got to wait on Trump and Congress to see what they're going to do. Right now, however, with the flows struggling to keep up, and there's other things too, which I'm not going to say them here. The people who get my subscription, I sent out an email about that this morning. By the way, if you want a 30-day free trial, go to pitbulleconomics.com and click on the tab that says products, and then you'll see a link that says get the 30-day free trial. If you sign up for a 30-day free trial, I will send you that email that I sent out to subscribers earlier this morning. There are other things in there that look like they're breaking down. All right. So, bullish sentiment shooting up. First time this year, it is well above its historic highs if you look at the AAII weekly sentiment survey. Futures open interest, fiscal flows slowing down, all that stuff. By the way, I would love to see a nice shakeout in the market. This would give a great opportunity next year, going into early next year. And I'd like that. Anyway, that's it for now. See you later. Bye-bye.